Gold and silver have fascinated people for thousands of years, not just for their shine, but as ancient, trusted forms of money. Their rarity and beauty have made them symbols of wealth and security across cultures. Unlike paper money, they hold a unique, enduring place in our world. People invest in gold and silver mainly for protection, especially when inflation erodes the value of cash. During economic or political uncertainty, investors often turn to these metals as safe havens. Gold is the king of precious metals, held by central banks and big investors as a core monetary asset. Silver, while also a monetary metal, stands out for its many industrial uses. Its price is shaped by both investment and industry demand. This dual role makes silver's story unique. As we approach 2025, understanding these metals is crucial. Gold has performed well, but silver may be poised for its own breakout. The shifting relationship between gold and silver prices, along with changing economic conditions, could create a special opportunity for silver. This script will explore why 2025 could be silver's year. Let's examine the forces that might make silver shine. The gold-silver ratio tells us how many ounces of silver it takes to buy 1 ounce of gold. For example, if gold is $2,800 and silver is $35, the ratio is 80. This number changes constantly as prices move. More than just a statistic, the ratio helps investors spot value. A high ratio means silver is cheap compared to gold, while a low ratio suggests the opposite. Historically, the ratio has ranged from 10-15 in ancient times to 40-50 in the 20th century, but it's often been above 60 in recent decades. Today, with gold at $2,800 and silver at $35, the ratio is 80, high by historical standards. This suggests silver is undervalued relative to gold. Many analysts believe this gap won't last forever. If the ratio falls, silver's price could rise faster than gold's. Investors watch this closely for opportunities. The gold-silver ratio is a key reason for optimism about silver's future. When the ratio reverts to historical norms, silver often outperforms. In 2025, this indicator could signal a major move for silver. Understanding this ratio is essential for anyone interested in precious metals. It's a simple number with powerful implications. Central banks create new money, often called money printing, to stimulate economies, especially during downturns. This process, known as quantitative easing, can reduce the value of existing money. When money loses value, people seek alternatives. Gold and silver, which can't be printed, become attractive. Inflation, when prices rise and money buys less, is often linked to money printing. In inflationary times, gold and silver are seen as stores of value, protecting purchasing power. The strength of the US dollar also matters. When the dollar weakens, gold and silver prices usually rise. Factors like high government debt, low interest rates, or loss of confidence can weaken the dollar. These three forces, money printing, inflation, and a weaker dollar, often combine to push precious metals higher. We've seen this pattern before, and many economists believe these conditions exist in 2025. Governments have spent heavily, central banks have expanded money supplies, and there are concerns about the dollar's long-term value. This environment is supportive for gold, and especially for undervalued silver. Silver's dual role as both a monetary and industrial metal could amplify its gains. Investors are watching these trends closely. The stage is set for precious metals to shine. In this climate, silver may have the most to gain. Understanding these dynamics is key for investors in 2025. Financial crises have repeatedly shown the power of precious metals. During the 2008-2011 crisis, gold soared as a safe haven, but silver's gains were even more dramatic, rising from $9 to nearly $50 per ounce. The COVID-19 pandemic brought another shock after an initial drop. Both metals rebounded strongly as governments unleashed massive stimulus. Silver's smaller market size means new investment can drive its price up quickly, making it more volatile, but also offering higher returns. These crises teach us that gold is often the first choice for safety, but silver can deliver greater percentage gains. In 2025, echoes of past crises are present: high global debt, geopolitical tensions, and inflation concerns. Central banks may have fewer tools to fight the next downturn. If another shock hits, investors could rush to precious metals again. Silver's current undervaluation relative to gold sets the stage for a potential rally. The lessons from 2008 and COVID-19 suggest silver could once again outperform gold. History shows that in times of turmoil, silver's explosive potential comes to the forefront. The next crisis could be silver's moment. Investors should be ready for sharp moves. Central banks worldwide have been buying gold in record amounts for over a decade. Their main goal is diversification, reducing reliance on any single currency and protecting national wealth. Gold is a neutral asset, not controlled by any one country. Countries like China and Russia have led the way, boosting their gold reserves to strengthen their currencies and shield against sanctions. This official demand supports gold prices and signals a lack of faith in paper currencies. While central banks focus on gold, their actions indirectly benefit silver. Rising gold prices often pull silver higher, as investors see both as monetary metals. Central bank buying boosts confidence among private investors, encouraging more investment in precious metals. The positive sentiment spills over to silver, creating bullish conditions. This backdrop strengthens the case for silver's rise in 2025. Silver's unique strength lies in its dual role. It's both a monetary and a critical industrial metal. Its unmatched conductivity, reflectivity, and antimicrobial properties make it essential in many industries. Demand for silver in green technologies is booming. Solar panels and electric vehicles are major drivers. As the world shifts to renewables and EVs, silver's industrial demand keeps rising. Silver is also vital in electronics, medical devices, and water purification. Its smaller market size means that even modest investment inflows can cause big price moves. This is why silver often outpaces gold in bull markets, though it's also more volatile. Investors should be prepared for sharp swings, but the upside potential is significant. The combination of strong monetary interest and surging industrial demand is powerful. If the gold-silver ratio falls, silver could outperform dramatically. In 2025, these factors make silver a compelling story. The metal's unique blend of uses sets it apart. Silver's time to shine may be just ahead. Technical analysis offers clues to silver's next big move. A decisive break above $30 per ounce has historically triggered strong rallies, with $50 as the next major target. Positive momentum can attract more buyers, fueling further gains. New technologies are expanding silver's uses. 5G, the Internet of Things, and advanced medical tech all rely on silver. This growing industrial demand provides a solid foundation for price growth, independent of investment flows. Of course, silver's volatility is a double-edged sword. Prices can swing sharply both ways. Economic slowdowns or regulatory changes could temporarily dampen demand. Investors should research carefully and diversify their portfolios. Despite risks, the outlook for silver in 2025 is bright. The high gold-silver ratio, supportive economic conditions, and central bank buying all favor precious metals. Silver's expanding industrial role is a powerful long-term driver. Key signals to watch: the gold-silver ratio, a break above $30, and continued strong industrial demand. If these align, 2025 could be the year silver steps out of gold's shadow. The future for silver looks promising.